expense because it's a benefit that I'm paying an employee.
So,
Make sense?
so just to, so I can understand, and many of us, I have an S corporation. I become an employee of my S corporation. Then my S corporation using this 162.
162 executive bonus plan, correct.
I can get a somewhat of a fringe benefit from,
Correct, because it's a benefit paid to an employee.
and then the company can write it off.
Can write it off, correct. Now, there's a difference between, that is with what our CPA was explaining. When you pay insurance to employees as a benefit only, you have to do that for everyone in the company, right? But that's life insurance in general. But executive bonuses, companies have the right to pay bonuses to employees, especially to executives and people who are high performers. When you do that executive bonus and the 162 bonus, you could do it to a policy, and that you don't have to offer to everyone. Okay? I just want to clarify that. Now, in this case, I'm showing this person that is putting $20,000 in his policy, right? And you have two things. You have accumulated value and you have surrender value. Surrender value is the cash that you can use, right? And whenever you need it, right? The growth, so in 10 years, how much money this client has put in that policy? 20 per year, so which is 200,000. And now he has in his account? $243,000. You remember our CPA says a lot of people don't save for their retirement? This is savings for your retirement. This is called a LIRP, a life insurance retirement plan. Okay? What's the best part? Those $43,000, you don't pay taxes on them. Because there's only 3 codes on the entire IRS where you can earn money and don't pay taxes. One of them is municipal bonds. Cities, they do projects and they want to raise capital, and the government incentivizes that so people could put money there so they could do their projects, and whatever you earn in that bond, they don't charge you taxes. The other called a Roth IRA. The problem with the Roth IRA is that the money that I put there, I already paid taxes on that money, but the profits is tax-free. I can only put about $6,000 a year. And the other issue is that if I take money before 59 and a half, I get penalized 10%. Right? So here, I could take money whenever I need it. So if I'm year number 4 or number 3, I need to use my money, I could take $50,000 from here. I don't pay taxes for it. I don't get penalty. None of that. I get clear. Now, I have all the advantages. If someone goes against me in court, this is against probate. So the money that I have in my business account, if someone goes in a lawsuit against me, guess what? That's open game. They could go against that, they could go against my equipment. The money that I have here is protected against lawsuits. Make sense? So you understand now why a lot of people are putting a lot of money there? Millions. This will get discussed in court, in divorces, in none of that. And I'm sorry to say this, but I learned that from a client. He's a doctor. I said, Jesse, I have that account because as of today, my wife loves me. And I didn't realize what he was trying to say. So as of today, my wife loves me. I said, now I grasp it, right? I said, I love my wife loves me, but I don't know what's going to happen in the future, he said. 2 years from now, she said, I don't love you anymore. And then she divorced me and we had to split everything. And the money that I have inside, I'm not telling you guys to do none of that. I'm just saying. I'm just telling you what the doctor told me, right? So is that fair? Well, you know, some people see it different ways, right? I'm not telling you what to do. I'm just saying why it's not discussed in court. Because, you know, whenever he needed, he could get that money. He could call in 24 hours, the money's in his bank. Grimaldo had a question.
Yeah, so in essence, this is a life insurance, right? So if I was to pass, I get $401,284.
Your family is going to get, let's say you pass, God forbid, I pray over your life so you live to 100. But let's say I'm 40, and in 5 years I have in the account how much? $102,000. In that case, my family is going to receive $102,000 plus the $400,000 of the life policy. So they will get $504,000.
This is the beauty, because as I was a spectator, this was something that I could have missed, because is not only an investment, but it's also life insurance that is growing tax-free, which is amazing.
So my family get both in this specific policy. There's some people that sell older permanent policy, which is whole life, which is a lot of banks have whole life. Some people attack, I don't understand, this is something that I don't understand, to be honest, for people who's watching. Some people sell index universal life, some people sell whole life, and some people like us, we sell both. Because for me, it's not that one product is better than the other. For me, the best product is depending on the need of the client. That's it. For some clients, a whole life policy would be better, but for the majority of them, an index universal life will be better. Right? You had a question.
Yes, I said let's just say if I were to pass, is that money taxed?
No, it's tax-free to your family.
So they can put it straight into another...
They could put whatever they want to do. Actually, if you study the lives of the Rockefellers, and you study the lives of the Vanderbilts at one moment was the richest family probably in the world. But now recently, in the last decade, you have the first Vanderbilt that has died broke. Now you have Rockefellers that they're still living wealthy. Why? Because they put a trust, right? They mentioned that. They open a trust and they have life for every single member of the family inside of the trust. So when someone dies, that money goes into the trust. And they keep buying more policies. Their family will never go broke. Because they keep putting policies and adding policies, and it goes back to the trust, and they keep building that. So they're building a legacy. Right? Someone had a question? Right?
So you have to start with an amount like this one is 20,000?
No. This is just an example. I have clients that put $100 a month.
And then also it's different like when we purchase, for example, I have a life insurance and it's a return of premium when I'm like 52 or something. And I only get back like, I think she said 35 grand.
Because you're paying $100.
Can you repeat the question so the Zoomers...
Okay. Thanks. To the Zoomers, she's asking, there's different kind of policies, right? You have policies, the one that she mentioned is called a return of premium. And the title of the policy explains what it is. They return the premium that you have paid. There's no interest earned inside of that policy. So you're only going to get what you paid. So if I pay $100 a month for 30 years, right, I sell those policies too. Some clients want that one. If I pay $100 a month for 30 years, that means at the end of 30 years, I'm going to be paying $36,000. So basically, it's putting $100 in a little porquito, saving it there, but it includes a life insurance policy. And at the end of 30 years, I break the porquito and I take the money out. That's basically what it is.
That's what I was like thinking of right now. I was like, okay,
but you don't
told me about these other...
Exactly, but you don't earn interest. And you cannot take the money out until you're 36. So hopefully you don't lapse that policy because you lose everything. So in 10 years from now, for whatever reason, you're still paying that policy, you have nothing. You lose everything that you pay. While here in 10 years, and don't forget about this amount. Any amount. It could be $100 a month, $200 a month. In 5 years, if I need the money, I take it. And if in 10 years I decided to stop working, I take all the money out. Make sense?
Yeah.
So you earn interest. And then imagine, this is only 10 years. You don't want to see what happens in 20 years. Because it's not that it's going to be double. It's going to be way more than double.
The younger you start, the better it is.
Yes, because the older you are, in order for the policy to work, you need to put more money.
Is there anything she could do? Or just a
That's
casi?
the other one we had.
No, because how long you had the policy?
3 years,
How much coverage you have?
100.
100,000 or you're paying 100?
The coverage, like what my family would get if I passed away?
Yeah, 100,000. To be honest, it's not worth it.
Yeah, that's what I'm kind of...
Because even think this way. Think this way as your car insurance. So you were covered for 3 years. Nothing happened to you. Thank God for that. Thank God for that.
That's what they sold it to me when I was getting my car insurance.
Exactly. So don't. And the reason they sell it because they don't specialize in life insurance. They want to do everything. So they sell you what they think is easier to sell.
Yeah,
Right?
I was thinking like just in case something whatever.
No, you're being responsible. Now, well, we don't know if you have living benefits or not. What company? You remember the carrier?
The what?
The carrier. What's the insurance company?
I forgot the name of it, but it's through State Farm. I think they sold it to me.
Yeah, most likely you don't have living benefits. So what it is important is, and this is great questions, and I appreciate your question because we learn, people have a lot of misconceptions, and I always say you cannot benefit from what you ignore. Correct? So in this case, I will definitely stop it because you don't want to wait so many years. What you're going to put, the same $100 that you're going to put for the next 27 is going to give you way more benefits and more money and way more than just the $36,000. So you're going to get way more. So yeah, definitely. That's a no doubt. There's no brainer, how I call it.
So she can basically.
She just stop paying.
Nothing happened to her, just stop everything and probably
And I wouldn't
move
get
in with
anything
you.
in return even though I paid for 2 years.
Nope. Nothing.
So I just basically was paying it, just.
No, you was paying insurance. Nothing wrong with that.
You had the coverage.
This is what happens. You were covered during 3 years. You were covered during 3 years. And what happens when you do a return of premium tends to be a little bit more high, the cost of insurance. Because if you ask me, if I put you on a term policy, you're probably early 20s, right?
32 actually.
You're 30? Oh, okay. So, well, good for you. So even at your age, $100,000, that's probably $50, maybe less. The reason it's 100 is because they're going to return you everything you pay. Right? That's why the cost increase. But when you do a regular term policy, you do it for 30 years, and it's half the price. And what I normally do is I do what I call a blend. I have a term insurance, which is cheap, and then I also have a cash value policy. Still, I'm going to get more money than both of them. But I have the high coverage that I need because here I want the least amount of coverage possible. When I design this policy, I have the least amount of coverage possible that the IRS allows me so I could keep the tax free. But this needs to be designed. A lot of people, agents could sell this, but they don't know how to design it. It's unfortunately my industry, and I have to say this, we're very transparent. My license is very easy to get. But people are very lazy on getting trained how the product works. Right? And then sometimes people complain and say, oh, but look at this. I said, has nothing to do with the industry. Has nothing to do with the car, has to do with the driver. Sometimes you have a great car, but the driver sucks. Right? And they crash the car, has nothing to do with the car. You have a nice Ferrari, great engine, but you crash it, brother. Because you didn't learn how to drive. And that happens in every business. So when you're here learning, getting information from this professional where you need to buy a house, where are you going to come? You need to go with these people because they know their business. They brought you people, they know what they're doing, and it's not the car only. The driver is super important. So when you do things like this, and we are very passionate about this because we understand that our community, the Latino community, is underserved.
And we're not educated about.
We are not educated about this. Actually, no, I applaud you. Guys, give yourself a round of applause to yourself for being here. For being here, because as I said, and as I mentioned, a lot of people, it's easy to complain, but what are you going to do about it, Papito?
Amen.
You know, it's easy to complain, but here on a Saturday, learning. So don't complain when 10 years from now I have several properties. I know how to do it. I know how to do exchange. I know how to keep my money. I know how to plan for my taxes. Because on a Saturday I was preparing while you were being lazy. So when opportunity arises, you call me lucky because opportunity meet preparation. No, I was prepared. You were not, Papa. So
many opportunities will go through in front of you.
of course, it will go in front of you.
You wouldn't see them because you don't know how to attack them, and that's the reason we're doing this. We want you guys to be ready with that. Again, as I was mentioning with the market, most people don't know that. They're waiting. I've been buying properties the last 5 years. I bought another one about 3 months ago, and I want to buy more, but right now I gotta stop. I gotta keep doing it, right? But there's the opportunity will show up. And if you're prepared, you're going to be able to take it. If not, you're not. So thank you, Jessica. Here's a question.
Yes, go ahead, sir, please.
You mentioned that banks put basically our money into this, right? So if I were to just say, take my savings, put it into an account like that, can I borrow up again?
Yes, sir.
Against my policy?
That is correct. That's the beauty of it. Do any of you know about who Jim Harbaugh is? Okay, Jim Harbaugh is the coach for Michigan in football. The university putting his money a lot of money every single year, and he take a loan out of his policy, $2 million a year. That's his compensation. But that $2 million, because he's taking it on a form of a loan, he don't pay taxes. So it's tax-free income. So you see here you have surrender value. So whatever you see is a surrender value. Whenever you need it, you could take it out. So there's people that they say, Jesse, I have $100,000 that are doing nothing in the bank. I want to put it on a policy. I wouldn't tell you to do year one. It's not a good strategy. In order to the policy to be work good, you need to transfer the money in a 5-year period so you don't break something that is called a MEC. Okay? A MEC is called a modified endowment contract. When you go over that number and you break that, you lose the tax benefit. You have to remain under that number. So when you make a plan, what you do is, let me check how much money I'm going to put. I know I got 100,000. Let me spread 20, 20, 20, 20. That's it. And in 5 years, I have my 100 in my policy. Now, anytime I need it, some people call it be your own bank. There's a lot of information or marketing about that on Instagram, all those. And then now I have my money here. So if I take $20,000, this is what the insurance company do. Because you have a death benefit, they give you a loan against that money. Why is it good to have a loan? Because if I take 20,000 from 100, then I'm not earning interest in 100,000. I will be earning interest on 82,000. Correct or not? Right? So what do? They don't take it from my cash. They leave all my cash earning interest. And they say, from your death benefit, I'm going to send you 20K. Now I'm going to lend you this. Yes, you're going to pay interest, but your money is still earning interest. And in some cases, you're taking the loan at 5%, and these policies have shown historically to earn about 7%. So even when I took 20,000 to invest it in a bathroom or remodelation or a down payment or a flip or whatever, and I use it to make money, that's kind of an arbitrage I'm earning now in 2 places with the same money. And when I make the profit there, I take it back and I put it back into the policy. But sometimes I took it out paying 5%, but my money is inside of the policy making 7%. So I'm using the money and still earning 2% of my money.
And making money at...
I'm making money on the second place. So there's a lot. You remember I told you would like to play chess and not checkers? You need to master your game, right? You need to be better. There's a lot of ways, right? So to answer your question, you have clients that pay $50, $100, right? The older you are, in order for the policy to work well, you need to fund it properly, right? But it has so many advantages. I'm protected. I earn it tax-free. Nobody, you don't get in a lawsuit. And then when I'm later in retirement, I could take tax-free retirement. Because basically it's my own retirement that I'm building here. That's why it's called life insurance retirement plan. And why it's important to protect myself against taxes, because what do we say about taxes in the future? They're going to go up. There's no ifs or buts about it. That's what's going to happen. So am I going to be strategic, or am I just going to play like everybody else and let the ball ride to see, a ver, Dios que reparta suerte? That life don't work like that. Life don't work like that. We have to be ready. We have to make the moves. Because sometimes we know what the right move is, but we don't do it. Cobardes. Life don't reward people like that. It's about action. You have to take action. Right? When I see an opportunity, when I know what the right thing to do is, let's do it. I just have to make a move. Let's make a move. I prefer to fail at something than regret what if would have happened. Right? Because you will have more opportunities. Let's go to the next slide, please. Next slide. So basically, this is the same policy, right? Explain, right? And here you have life insurance, municipal bond, Roth IRA, taxable investments, and qualified plans. What is a qualified plan? A 401k, a IRA, independent retirement account. All of those, you could have tax-free death income, which is what you were saying. I think you asked. The family, when my family received this money, is tax-free. Everything. The cash, the growth, and the death benefit, everything goes. This is the only vehicle that what I save there goes to my family, tax-free. You know?
Roth IRA.
¿Qué tenías? Mm-hmm. So there's nothing wrong with Roth IRA. There's nothing wrong. The only difference is that you're going to, if you have a Roth IRA, you are limited at how much you can put in. Also, you have to wait until 59 and a half, otherwise they're going to penalize you. There's other things that you are, trapped there, but you eliminate all of those here. Right? So you have all the benefits on a policy. A lot of people don't know this. And you said something. We lack information. And just for you to know, I'm in Florida, and I arrived at 12. My friend Angel, he feed me at that time a steak sandwich, 2 of them. I don't know how I slept, but I was very hungry. He cooked very well. He cooked very well. Not because he's my friend. He's a great cook. I have to give him credit. He's a great cook. And I ate 2 of them. And then we talked until 1 o'clock in the morning, and I had to wake up at 5:30 because I have people in Florida that normally get trained on Saturdays. So I was connected in my computer training my agents in Florida. And then tonight I fly back. I only came for you guys. And because of the friendship that I have with Juan, the respect that I have for what they do. Because what they do for the community, nobody's paying. This costs money. It's the passion that they have to help people. It's the passion that they have to bring value to our community. We should value that. You should give an applause to these 2 guys and all their team. Because in reality, I don't get paid to be here. I don't get paid to be here. I pay my own to be here. But we are passionate about bringing education to our community, to bring understanding, to elevate our community, right? Because we're going to pass that to our kids, right? So the question for you, thank you. So we are growing and we need agents. We are looking for people who like to help, who like to educate. Our market, the country needs about 2 million agents. We are underserved and we are underrepresented. So if anyone here is looking for an extra source of income, touch me at the end. Let's have a conversation. And I tell you, because we are building something together too. The Grimaldo Group is going to, branch to another division, which is this specifically, to help families too. Right? So let's have a conversation at the end if you are looking for an extra source of income.
Thank you, Jesse. Yeah.
Can anybody qualify for life insurance with medical problems?
No. No, the question is, no. Some people do.
What was the question for Zoom?
For Zoomers. She's asking, and that's everything has pros and cons, right? The con of this is when I have preconditions, certain of them, I may not qualify for it, right? But I could qualify for an annuity. The annuity don't matter my health.
So the question was, can people that have health issues
right?
Buy life insurance? The answer is no.
The answer is maybe. The answer is maybe, right? Because you might qualify. It depends. Even people that had cancer before, if you are 5 years clear, completely clear, then you might re-qualify for that.
But you can't qualify if you're diabetic with high blood pressure.
No, I have people qualify with high blood pressure. I have high blood pressure.
But not diabetes.
I have some people with diabetes that have qualified for insurance. Because there's certain carriers that are a little bit more flexible. It depends, because you could have type 1, you could have type 2. It depends if you're on insulin or not. So there, as I said, it's not a black or white. There's some opening. And we could talk later at the end, and you give me all the information, and I could call direct, because I know, certain carriers, they have special programs, and they know if you have it under control. So there's a lot of things that come into. That's a great question.
And I wanted to add to that. This is why it's very important when you get to consider buying a policy to get a broker, a proactive broker. And that way they can work with you and design something specific. If there is a person that has diabetes, he or the broker can now canvas through the various carriers which one will best fit your needs with the person that has diabetes, etc.
And this is the beauty of having experts. We're going to branch out. The reason we want to do this, once again, is to give back to you guys, and also to have the next generation be better than us, right? And have a better life or lifestyle than we did. I think we're better than our parents. We can all attest to that, right? Our parents came here as immigrants, most of us. And now, how can we improve the life of our kids and our grandkids? So, especially.
I was going to ask, we can also purchase these kind of plans like for our children?
Yes. Actually, 14 days old.
Oh, was that?
14 days old.
Oh, wow.
After 14 days old, there's something that I don't know if you have access to YouTube that you could show here. And before that, you could access YouTube and then come here. Actually, get my information, please. Say my information.
Well, she finds that information.
Just check on YouTube. It says IUL for kids. I'd like for you guys to see this video. I write a lot of policies for kids because that is used in replacement of what they call 529 plans. Why? Because here you have way more benefits in the policies than just saving in an account. They're going to earn interest. They're going to have protections. There's so many things that they're going to have, and that is way better. So while she looks for the video, try to point your camera here.
Scan this information.
Let me see that is the right video. Give me just 1 second, please.
And in the meantime, like I said, it's important that you guys pass this information on to the next people, and if you guys are interested in starting a career in this, or maybe a side gig, I'm passionate about real estate. Obviously, that's my main bread and butter. I love that. But I also I have life insurance. I policy with them. I have another term life insurance. I believe in it. How many people do you see on the corners begging for money to bury their loved ones?
That's crazy
happen after that,
and unnecessary.
Right? We don't think about that. Nobody wants to die. I don't want to die, but I'm going to die someday, right? That's for sure. So how can we prepare not only ourselves and our family members so that when the time comes, they're not only in a good position, they're going to be able to keep moving forward and make the payments, easier than
and we're going to show this video, and basically with this we're done. But the biggest misconception, and I was talking about earlier, right, is because people, I don't know, talk about life insurance because I don't like to atraer la muerte. And I would tell them, I'm not talking about life insurance, we'll put it further, right? Because not talking about that doesn't mean you're going to live longer. It doesn't matter. The day que te va a tocar, te toca, mijo. But the thing is that if you don't die, and then you leave a lot of trouble for your surrounding, you make, people miserable. And then you have the elder, we have policy for people up to 89 years old. Right? At least a small policy for what we call final expenses. Nobody should be doing a car wash, asking for money on a church. Nobody should be doing that. Right? That's completely unnecessary. You want to tell us anything?
So I do want to re-emphasize what he said earlier, and that is the living benefits. So some policies have living benefit, but it's just for terminal illness. But you should consider getting a policy with terminal illness, critical, and chronic. And those are called living benefits because if you suffer a heart attack nowadays, 90% of people that suffer a massive heart attack today do not die. But they are going to go through an extensive recovery period. And that may not allow that person to go work. And if you are an investor, a business person, and your job, your business depends on you, and you can't work for 6, 7, 8 months, what's going to happen to everything that you have, your livelihood?
I think this video covers that, right?
This is for...
Correct. It covered, even though for kids, but to answer her question, this will show you. And hopefully all of you grab my information. And when we're done with the video, if you could upload it back so they could, whoever didn't take it. And I'm going to be here for, the next half hour. So we're going to have conversations. And as I said, we are trying to grow, and once more, if you're looking for an extra source of income, let's have a conversation because I have a lot of people from every ways of life. We have doctors, we have lawyers, we have engineers, we have professionals in every area making 6 figures with us, right? Just with our license, because there's a lot of need on the market, right? So if you're that kind of person that you like to educate, that you like to help people, please come talk to us. And if you have any other questions about products, then we could set an appointment, and we more than gladly will give you, it's a free consultation. It costs you nothing. So I say goodbye with this video, and thanks for being here.
One more.